Should you be buying Micron Technology, ticker MU, here or sitting on your hands? Just a heads up, this is educational, not financial advice. Always do your own research. Over the next few minutes, I'll give you the complete picture, what the company actually does and how it makes money, what the chart and the technicals are telling us, whether the fundamentals back it up, what Wall Street thinks, the catalysts coming up, and the part most people skip, exactly where this trade would go wrong. I look at everything through a swing trade lens. Setups to hold for roughly 15 to 30 days, not day trades and not forever holds. Stick with me to the end for the honest verdict. Let's dig in. First, the business. You should never trade a stock you can't explain in a sentence. So, what is Micron Technology and how does it actually make money? In plain terms, designs, develops, manufactures, and sells memory and storage products. It's a technology company and worth about $1.3 trillion. To put that in context, that puts it among the largest companies in the market, a mega cap, which usually means steadier moves and deep liquidity. Why does the business matter for a trade? Because it tells you what actually moves the stock and whether a move has staying power or is just noise. With the what covered, let's get to the when. For a swing trade, timing is everything. And that starts with the chart. Let's read the price action. The technicals tell us about timing. Here's what they're saying right now. Start with the moving averages. The 50-day average is the short-term trend. The 200-day is the long-term trend. When price is above both and they're rising, the trend is healthy. When it slips below, momentum is turning. Right now, Micron Technology is trading about 55% above its 50-day and 183% above its 200-day. So the trend is on its side. Next, momentum. The RSI runs from 0 to 100. Above 70 is overbought and can be due for a pause. Below 30 is oversold and beaten down. Here, it's a neutral 59. Neither stretched nor washed out, which is a healthy place to enter from. And it's pressing right up against its 52-week high. That's strength, and a breakout to new highs has nothing but open air above it. A chart only tells half the story. Do the fundamentals back it up? Let's look at the growth and the valuation. On growth, earnings are growing fast, more than doubling from a year ago, and revenue is more than doubling. That matters because rising earnings and sales are what ultimately pull a stock higher. The chart is the when, the growth is the why. Now, valuation. The forward price to earnings ratio is simply what you pay today for a dollar of next year's expected earnings. Lower is cheaper. At about 10 times, that's on the cheap side. You're not overpaying. Let's bring in two more things. What the pros think and what's coming up on the calendar. On Wall Street, 40 analysts cover it, and on balance, they rated it a strong buy. Take analyst ratings with a grain of salt, by the way. They're often slow to change, and they rarely say sell. But a cluster of buys is at least a tailwind, not a headwind. Now, the calendar, and this is important. Earnings are due in just a few days. Earnings is the single biggest scheduled risk for a swing trade. The stock can gap 10% or more overnight in either direction, no matter how good the setup looks. So, if you take this, either size it small or plan to be out before the report. Don't get blindsided. Here's the part that matters most. The downside. Where is the Micron Technology thesis wrong? Let's be honest about both cases. Here's the bear case. What kills this trade? The 50-day trend line is your line in the sand. As long as price holds above it, the setup is intact. But if it breaks down and stays below the 50-day, the trend has flipped. The thesis is dead, and that's where you step aside. No hoping, no averaging down. And here's the bull case. If it holds that support and the trend keeps working, the path of least resistance is higher, and that's the move you're trying to ride. The honest truth is, nobody knows which one plays out. So you don't predict, you manage. Decide your exit before you enter. Size the position so that being wrong at that level is a loss you can shrug off. Never bet the farm on one idea. And never let a swing trade quietly turn into a long-term investment just because it went against you. That discipline is the whole game. It's what separates traders who last from the ones who blow up. Every stock has two sides, so let's do both. The bull case and the bear case for Micron Technology. First, the bull case, what's working? Earnings growing fast, sales more than doubling. In a clear uptrend up above its 50 and 200 day, Wall Street agrees. 40 analysts rate it a buy. But here's the bear case, the risks. Extended, 55% above its 50-day, so pullback risk. Near its 52-week high, limited room and overhead resistance. Earnings in 3 days, a binary event mid-trade. That's the honest picture. Both sides. You decide if the reward justifies the risk. So, Micron Technology, buy or wait? My take, this is a watch, not a screaming buy. The trend is intact, and there's a lot to like, but I'd want a cleaner entry or a stronger confirmation signal before committing. Put it on your list and let it come to you. Whatever you decide, do your own research, size it right, and manage your risk. No single trade should ever be able to hurt you. Found this useful? Subscribe to MoneyQuest Lab, and you'll catch the next one. New picks daily. And remember, this is educational only, not financial advice.